Hey everybody, this is Jose Blasco here. We are about to get started, as you can see on the screen, in around 30 seconds. I'd love to use this time for a quick sound check. I believe sound should be good, but the best way to confirm it is to say hello. So if you could, guys, type back to me hello on the chat box, then I will know that you heard me, and I will know sound is good and we are ready to go. 15 seconds and we begin, everybody. So please go ahead and have a quick hello to all the traders here in the session today. Thank you so much. 2, 1, and 0. That's it. The countdown reached 0, so it's time to get started. Thank you guys for those messages. Wonderful. Welcome to the session. Today is October 10, 2022. This is our multi-asset CFD trading session. Live trading in partnership with City Index. A pleasure to be part of this session. And thank you very much, guys, for joining me today in such a powerful session that we have in front of us. Before we get started, as always, I would like to highlight on the upper left side of the screen our financial disclaimer. Please read it carefully. It is important information. It is not that long, isn't it? So I'm counting on you all to read it completely. Do not skip it, as it is important. While it's being highlighted and you're doing your readings, in parallel, I would also like to ask everyone to be engaged, not to be shy. We have an hour in front of us to look at the markets, to identify market opportunities, to have questions, to have answers, and all of the above. The idea is that we act and we work as much as a team as possible. I'll do most of the talking, obviously, but certainly I'm here for you guys. So please make sure you interact with me. Do not be shy. You may be very advanced and then you have no questions. You may be less advanced and you may have questions. And I remember when I was in my early stages where, it felt a bit like, oh my God, I got this basic question, but, maybe I'm slowing down the group. Well, let me be the one to decide if that's the case, if you don't mind, so I can help the group better. And anytime you have a question, just phrase it. Yeah, if the answer is coming later or we need to organize a special session to take care of your particular question or need, we'll do that. But the one thing I cannot do is, without your engagement and your participation, I cannot really guess what are you guys thinking, and therefore I am limited on how much I can help you all, okay? So counting on you guys to be engaged, and one nice way to prove it would be to just type a quick, I'm with you, Jose, on the chat box or something like that, okay? Cool. Thank you so much. So the session today, we're gonna get ready to trade. So the idea today, this is not a lecture day, even though, of course, I will be adding a lot of educational comments. And if I need to pause and, for a moment pause and talk about something, for sure, I'll do it. But this is a session for us to trade. Practice leads to skill. Knowledge is great, but knowledge by itself doesn't do anything. We have to take the knowledge, practice. It becomes a skill. And this is the plan, okay? You may trade paper money, you may trade real money, you may trade the small size, larger size, whatever it is what it is, but without a practice, it's not gonna happen. So my goal in today's session is to help you practice in whatever area of your comfort is, but certainly practice, looking at market opportunities, discussing why they make sense or they don't, how to manage the risk, and all of that. We're going to do that across different markets. So we're going to focus on, especially today, I'll focus on the Forex the most, maybe a little bit of indices. But again, these sessions are supposed to be and will be as rich as you guys need to. So we'll add stocks, we'll add commodities like oil, etc. Okay, and for sure, as I just said, feel free at any moment in time to ask questions so we can, we can understand better what you need. Very good. So as we continue and as we are getting ready to start the session, I wanted to flash very quickly, and maybe I'll show these QR codes a bit later in the session as well, in case you didn't have time to take a picture or take a scan. But basically, City Index is running specific rewards and specific promotion related to knockout options. And you can find out more about it by just clicking there. So instead of me being the one going to the web page and spending time reading the web page, I guess you can do that later or during the session, and therefore those QR codes are there out of convenience for you to scan and take a look at such benefits. With all of this said, that's it. I'm done with the introduction for the session. We are now jumping into real-time markets. Later, again, I'll flash these QR codes in case I did it a bit too fast. so you have time to grab them. Okay, cool. Anyway, so here's the market. Okay, let me explain some of the things that we're gonna do in the session. We're gonna be trading, as I said, multiple type of markets, Forex, indices, etc. And obviously we are using CT index to trade. So how are we gonna do it? Well, one very simple way to do it is to use the WebTrader platform. I believe that if not everybody, almost everybody has some time in your life logged in and realize that inside the WebTrader platform you have access to so many markets that you could pick, and the moment you click on them, you can, here on the right, you can execute a trade, etc. But the other thing, which is more powerful, is the fact that TradingView, which is the platform I got on the screen as we speak, TradingView, which is a broker-agnostic trading platform, is actually a platform that could be connected and linked to CT Index for you to have the convenience of all the tools and the community aspect of TradingView in your trading, while you are connected to not only execution but also market data from CT Index, which is, as we all know, very, very fine. So I want to show you all, because this is a question that we've seen happen repeatedly. So I want to show you all how, when you look at the standard way to be connected with TradingView, typically what you see here on the bottom, it's this word paper trading, meaning that anyone could come in here, type a ticker symbol. Maybe you want to look at McDonald's as a stock, or you want to look at the euro or the pound, and you just click the symbol, and TradingView provides the market data, and then you can do paper trading with it, because TradingView, while it's nice, it's not a broker. So you cannot execute trades with real money and make real profits. So now, how can we do it? Well, the way to connect TradingView to CT Index, it's extremely simple. You will click on that little box where it says paper trading, and then on the drop down on the upper left, you can go and see all the list with all brokers. So I have already, start CT Index here, but if you haven't started, so there's a long list here. Obviously, many of those brokers are, very specific. Maybe, some small company. CT Index is here on the top. A large firm, very reliable market data, impeccable executions. The moment you click on it, okay, it's gonna give you access to. You see here now it shows a CT Index, and you can see also the alias for your account. In my case, the account is account 1. Again, you may need to type username and password. In my case, I typed it and I asked TradingView to remember it for me, so I don't need to type username and password every time. But notice that now, by connecting TradingView to CT Index like I've just done, you have now the green light next to the word CT Index below, which means two things. Number one, that if I take a trade, which I will, the trade is going to be routed and executed in your CT Index account, which means that then if I was to go back to my WebTrader, right, and I look at, I created here a tab with trades, and I was to look at orders and positions inside of WebTrader, then you would see the trades here. Because while this is a different platform, the trades are happening inside the same account, even though I am using two different types of softwares to get to the account. Okay, so I'm giving you this important explanation at the beginning of the session, because I am going to be executing trades, and I need to make sure that all of you are equipped with the same tools I have, so you can execute trades and practice with me if you choose to practice with me. With whatever size we decide, with paper money or real money, all of those are obviously your decisions. But if you choose to practice with me, so you know how to do it. So CT Index, okay, you have selected it here, and by selecting it, first, the trades will be sent through CT Index, but second, and also very important, when you type a symbol, for example, I want to type the euro, so EUR. If I was to look at Euro Forex, right? So notice how there are so many euros here. It's going to be like, which one is my euro? Well, notice on the upper right, we also have CT Index with an empty box for you to check mark. So the moment you check mark, notice now how next to the euro US dollar in this case, you have the market data provider in this case being CT Index. So you have the market data from CT Index and the execution through CT Index, thanks to connecting your TradingView to CT Index. Okay, so it's very simple. And to make it even simpler, and I will get into that today. Maybe I could explain that another day, but I really want to spend time on the charts and the trades. But basically, I've created myself a watch list on the right here with very relevant markets like the S&P 500, the Nasdaq, the Dow Jones Index, the FTSE, the DAX, the Singapore Index, crude oil, and many of the currency pairs. Okay, the Aussie dollar, the euro dollar, etc. So they are all here on the right, and all of those, if I click on any of those, notice that not only they load, but they come with the word CT index. So they are all bringing market data from CT index to the equation. And if I was to open an order panel, which I will redo all of these very slowly later, no worries. If I'm going too fast now, I just want to give you a little, I'm giving you a tour right now. Later you will see me use it, and I will spend a bit more time to explain it. So notice now, if I take a trade with the Aussie dollar, also notice how I got the word CT index. So CT index above, CT index here, CT index below. That means that even though I am using TradingView, this is 100% connected at all levels with CT index. So whatever trade I take, whatever execution I do, is going to be seen as well on the web trader, because again, one last time, this is the same account. Okay, cool. Okay, so with all of this said, we are again, if you have questions about what I just explained, and I am aware I went quite fast, but if you have questions about what I just said, please let me know. I am certainly happy to repeat. I will certainly repeat that more times in future sessions too. And I will also spend a bit more time later when I execute some trades. So everything becomes second nature through practice and repetition. So I would say no worries. But certainly if I went too fast, make sure you tell me, okay? So far, you guys have been a little bit shy on the chat box, okay? So please do not be, because again, I am here to help, and I am limited on how much I can help you unless you interact with me as much as possible, okay? Cool. Okay, so let's begin. Trades. Let's begin planning on trades, okay? And the first thing I'm going to do is I'm going to wear the hat of a long-term investor, okay? This is what I'm going to do. Later, I will wear the hat of someone who wants to be more active, and later I'm going to wear the hat of an intraday trader. So I'm going to go from less active to more active, okay? From less active to more active. Also, in this process of going from less active to more active, I am going to be using two tools that are going to make me compatible with all of you. And what I mean by that is that there are many ways on how to trade. Some of you out there, and feel free to type it on the chat box if some of you have been trading for a while and you have some specific techniques or preferences, I'd love to know. So for example, let's say some of you are Fibonacci traders. Let's say some of you are trading with technical indicators. Let's say some of you are trading based on fundamentals, etc. So I'd love to know a bit more about you so I can help you better. But basically, what I'm going to do on the chart, it will end up being compatible with all of you. Meaning that if you don't have a technique on how to trade yet, well, hopefully you will embrace how I look at the markets, and hopefully the sessions will help you and you will develop a method. But let's say you already have a method on how to trade. Well, what I'm going to do is I'm going to overlay on top of your method additional tools to statistically add more odds to the market opportunities that we find, and those trades will tend to be compatible with yours. And we'll just add an extra confirmation if you wish. Or we can also think about it backwards, which, maybe you want to look at my trades with your methods, and if your methods agree, then you got double confirmation, okay? Again, I'm going to make myself compatible with you in this way, because obviously trading is very particular and we all trade differently. So how can I make myself compatible with everyone? Well, I'm going to be focusing on two key questions every time I plan a trade. And this is, of course, on top of managing the risk, defining the size of the trade, managing the emotions. All of this is for sure. But I'm talking about purely technically on the charts. There are two questions I need to answer for every trade, which is, number one, should I be a buyer or a seller? That's the first question. So whichever market we trade, could be the S&P, could be the Aussie, could be the Singapore dollar, could be crude oil, it doesn't matter what. The first question is going to be, should I be a buyer or should I be a seller? And once I got that question answered, the next question I need to answer is, Okay, so now that I know I should be a buyer or a seller, which price do I enter at? And which price do I exit at for either a profit or a loss, depending if the market went my way or not. So entries and exits is going to be my question number 2. Buyer or a seller is going to be my question number 1. And to have answers which are objective, mechanical, and that rely on statistics instead of having a human bias, which may lead to trouble, I'm going to use a tool on the left called AutoClimate. This is a tool, by the way, which is free that you can find on our website. Even though you could use any other tool. For example, I said question number 1 is going to be answering the question, should I be a buyer or should I be a seller? So maybe the way you do it is that you are a trend trader and you define the trend, and now that you know the trend is up, so you are a buyer. Now you know the trend is down, you are a seller, and you define the trend by looking at high and lows, or you use moving averages, or you name it. So you may have a technique on how to answer that question. Great. In my case, I'm going to use the climate. And question number 2, which is the entries and the exits, I'm going to use what we call the UFOs. You can see the UFOs. And by the way, I froze the screen when I do the drawing. I freeze the screen all the time. So I froze the screen, and you can see this red UFO, this green UFO. UFO, okay, UFO stands for on-field orders. So when it's green, it's buy on-field orders. And when it's red, it's sell on-field orders. Some of you may look at the UFOs like Fibonacci retracement lines. Some of you look at the UFOs like support or resistance lines. Some of you may look at moving averages where you expect a bounce, a pierce of a Bollinger Band, you name it, okay? But in my case, I'm going to use these techniques because then you can overlay this with anything else, okay? So this is going to be my approach to make myself compatible with everyone, okay? And with all of this said, I have a lot to say today. I normally speak fast in case you haven't noticed. So again, feel free to ask questions or slow me down. Okay, it's okay. I can take it. I'm a trader. So if you want to say, Jose, you're going way too fast for me, you can be direct with me. Okay, I'm a trader and I'm Spanish, so I can take it. But now, seriously now, again, I have a lot to share with you today because it's our first session for CFDs, isn't it? And obviously, I would envision that the majority of us, we are working together for the first time. And just like I need to know about you, you also need to know about my trading styles and how I think. So what I do can end up being useful to you. And therefore, today I need to do a little bit of extra talking as we spend more sessions together. I will be a bit more focused on the charts and have a bit less additional comments around the trade plans, okay? But today, if I can, I will request that you guys bear with me in the sense that I have lots to comment and share, so we are on the same page, okay? Clement, how to set up the indicators on the chart. So I can show you that if you'd like towards the end of the session. A quick answer now would be to tell you, you can take a look at our website. Our website, it's tradewithufos.com, and then you add apps/apps, and you will see the apps there. And then later, if you have additional questions, if you take a look and you have additional questions, for sure, we can talk about it at the end of the session. Again, those are the tools I use, and for sure, they can be of very useful to you all as well. But again, I also assume and anticipate that many of you don't need those tools at all because you may have your other tools, your other methods. So very good question, Clement. Again, let's find a few trades. So I go deeper into the trade methods and so on. And later at the end, we can talk more about how to add those tools to TradingView and so on. Cool. So let's go for it. I said we're going to start from long-term investing, so very passive, relaxed type of trader, to a bit more active, to a bit more active, to all the way intraday trading. Okay. So we're going to start taking it easy from a speed point of view. And to take it easy, and I'm going to focus on Forex, to take it easy, something I love to do is to focus on the swaps. Okay, so the swaps, and probably all of you know that. For example, if you look at the euro pound, okay, I'm looking at the euro pound, and let me move to web trader. So if I look at the euro pound, so euro pound. Actually, I am in the popular tab, so that's why I didn't find it. So euro pound. Here we go. So if you look at the euro pound and you look at market 360, and you look at the financing charge, it tells you that by being short the pound, just because of being short the pound, you make 11 cents every 10,000. Okay, this is for every 10,000 euro you make, and which of course you don't need 10,000 euros because we trade on leverage, isn't it? So for every 10,000 euro you're going to make, you're going to make 11 cents every 4 days in this case. Okay, this is calculated this is per day because the last time I was looking at this, it was over the weekend, so it was a different figure. So 0.11. Okay, so this is per day. So in other words, just because of being in the trade, no matter if the euro pound is moving your way or the euro pound is moving against you, you're gonna collect some profit just because time is passing. Now, of course, this is not something for us to close our eyes and be very, and not take it as this seriously, because while you are making 11 cents a day every 10,000 euros, and you may have a trade with multiple lots, so you may make a collection of dollars per day. You may have the euro pound move against you, and the speed at which the euro pound moves against you may be very problematic, and you may lose money faster on having the euro pound moving against you versus what you are making on collecting 11 cents per day on leverage. So we always need to keep price direction in our favor. But the reason why I'm talking about swaps is because I am planning on a long-term trade. And because I am planning on a long-term trade, I plan to be in this trade for days and days and days, ideally weeks and weeks, maybe a few months. And if I'm going to collect 11 cents per day on leverage times many, many, many days, in the end, that may create an impact on the net overall result of the trade. Even if the euro pound goes my way or against me, maybe it goes against me and I'm stopped out. Let's say 3 weeks from now, well, guess what? I ended up losing less because while I've been stopped out, I was collecting swaps for 3 weeks. Or now, let's say it takes 5 months to get to my target. Well, now I made a nice profit in 5 months, but on top of that, I made an additional profit because of the swaps. So again, the swaps is probably something that is known by most of you, especially if you're trading Forex, I would think. And what I've done here is two things. I created a list for myself with negative swaps and another list with positive swaps, which the plus swaps, those are currency pairs. And I'll zoom in case you want to take a screenshot. So those are currency pairs that pay you swaps if you are long. Okay, if you are long. So now if you're short, you pay swaps. So that's not a good idea if you plan on a long-term trade. But if you are long, you get paid swaps on these ones. And I'm going to zoom in with swaps for shorting opportunities, in case you want to take a screenshot. So this is the list of currencies that pay you swaps if you get short in a daily basis. Okay? So now, this is a great benefit if you're going to be staying in a trade for a long time. But there is another second very powerful benefit, which is the other key reason why I'm doing this, as I am wearing the hat of a long-term investor. Remember that. The other real reason for that is that the only way you get paid swaps is because the interest rate of one of the currencies is greater than the other currency. And the interest rates normally are higher when, fundamentally speaking, things are better. So in other words, by trading in the direction of the swaps, you're killing two birds you're killing two birds with one stone in most cases, which is number one, you are adding fundamentals in your favor without even doing fundamental analysis, which is quite convenient. I like to be pragmatic. I'm not sure about everyone else, but I do. So first thing is that we are adding fundamentals on our side without even doing fundamental analysis. And second, now we're going to get paid swaps. No matter what, even if the currency was to move against us, we will still collect swaps, which may mitigate a little bit the loss or enhance the profit if we're right. Okay, so that's why. Now, when looking for that, of course, I need to look at a large time frame. So on the left, where I got my auto climate, and I'm going to maximize the chart, I'm looking now at a weekly, W is for weekly. I'm looking at a weekly time frame of the pound. And remember, the pound, the euro pound, is a currency that pays me swaps if I go short. Notice I have it on my list minus swaps. So I want to go short. But what's the climate telling me? Well, the climate is telling me blue. If you are a trend trader, probably you're calling this an uptrend. So the market condition on the euro pound, technically speaking, it's not giving me permission, and therefore I'm going to go for the next currency pair, because while I would get swaps if I was to go short, probably I would see the market move against me. At least statistically speaking, the climate is blue, which is a statistical invitation that tells us that being long carries with it a statistical advantage, and therefore being short, is the opposite, right? So you don't want to do that. So I'm going to the next one, which is the Euro Kiwi. And with the Euro Kiwi, we have similar situation. We get paid swaps as well, but also the climate is blue. So I'm going to pass. I'm going to look at the Euro Sing. And in that case, now we have something, right? We are in a position where we have a climate which is confirmed to be red. It's a down climate. So based on my trading analysis, on my trading techniques, my trading tools, auto climate, I am being told by this tool that statistically speaking, being short has an advantage. Okay, notice that the tool goes from blue, to red, maybe a little one color change. That's not very common. Okay, red to blue, one color change, red, one color change, red, blue, red, multiple colors, red. So when you get a color in place, typically, and this is actually statistically speaking the perfect time, because this is the beginning of a climate. If the climate propagates, we're going to get a move of a decent magnitude. And remember, every one of these candles is 1 week. So we are setting ourselves up for potential opportunities to be short for a long-term trade, multiple weeks at least, and get paid swaps at the same time. So we are looking at the euro. We are looking at the euro singular. I want to show you exactly the swaps that are being available. I keep typing on popular. The swaps that are available on this particular currency pair. Market 360, finance charge. This one is paying 17 cents a day, so it's better than the euro pound. So the euro sing is a better choice. And now the key question is, okay, so now that I know, based on the rationale I shared with you, that I am open to plan on a trade to go short the euro sing dollar because I'm going to get paid swaps. The climate confirms the right direction to trade based on stats is to go short on the weekly time frame. So now the next question is, where are my entries and where are my exits? So now I'm going to get to find my UFOs. Okay, and I'm going to load a time frame. I'm going to at least a 4-hour time frame. Okay, at least a 4-hour time frame. And we're going to see what we have on the 4-hour time frame. Okay, so for you to see, let me narrow this a bit. So maybe like that, it's going to be clear. Okay, so here's the current price of the euro sing dollar, blue color here. Okay, above, all of those are pockets of sell on field orders where the expectation is when price comes back to any of these pockets, the expectation is to the sell on field orders to get filled and see this market to go down, which is what the climate suggests, going down for multiple weeks. But the entry point, in this case, we would set the entry point to be right here. Why? Because there is a UFO. Again, that's my technique on how to trade. Maybe yours is because you identify these pivot lows. Oh, sorry, I'm just using the wrong drawing tool here. Sorry, guys. You identify those pivot lows, and you are calling this support or resistance with multiple turning points around this price point, etc., etc. And therefore, this is your support, resistance area, and you want to short a resistance, or maybe you do fibs or you do moving averages, you name it. In my case, I'm going to combine it. Okay, what I'm going to do is the following. On the left, I have my weekly time frame, and I have a moving average in place. So what I'm going to do is I'm going to draw a ray where the moving average is. Okay, because the ray I have just drawn here, the blue line, notice this blue line is showing up here. Okay, it's showing exactly right there. And what's the beauty of that? Well, the beauty of this, as you can see, is that the moving average, which is a relevant price point, just like support, resistance, etc., that is basically in this UFO zone. the UFO zone, let me widen it. This UFO zone goes from the top 140.21 to the bottom 139.42. Okay, so this would be my trading zone whenever this currency goes at 42 or above, which is currently trading at 37. So we're just a few pips away. We just need this currency to move up a bit, and then I'm happy to take a trade and short this currency pair. Okay, so I want to place an order to do that. But of course, when I talked about entries and exits, we talked about entries and exits, not entries only, right? So what about my targets? Okay, when am I going to take profits on this trade? Well, let's turn on, since I am a UFO trader, let's turn on the UFOs on the weekly time frame as well. And let's find out if we have UFOs anywhere below. And notice that the euro Sing dollar has nothing below price. If I move to a monthly time frame, this currency has nothing below price. There is nothing, right? If I zoom out, okay, below price, we don't see anything, okay? We have a little dinosaur here telling us that this is the beginning of the data feed. So there is nothing below, right? So because there is nothing low, that means that if there was a green UFO there on the screen, okay, waiting, the expectation would be that when the euro Sing dollar falls and gets to the green UFO, it's going to bounce and go back higher. That would be the expectation. But there is no green UFO, so this will be my target. I would take profits around, 136 or something like that. I would be happy to take profits. But we don't have that green UFO, right? We don't have it. So because we don't have it, we have, huge amount of potential drop on this particular currency, okay? And that is something that we could certainly try to capitalize on, even though we also need to be as objective as possible. So I want to show you that, but also I want to check the chat box to see if anyone was asking questions. I don't see any questions at the moment. You guys have been very quiet so far. Can I get a quick, all is going well, even if you want to summarize it with a quick okay on the chat box, can I get that? So I know you guys are with me. That would be really appreciated, my friends, especially in today's first session together. I really, more than ever, need your feedback, okay? So please work with me on that. So now I need a target, okay? Because while we said these may fall and fall and fall, of course, it would be a bit too hopeful of me as a professional trader to be like, okay, this is going to fall and it's going to go to zero. I mean, come on. That's too hopeful, isn't it? So we need to always set our entries and our exits, and we need to use techniques on how to define where we think a valid target would be. So in a perfect world, you would have a green UFO and you would set the UFO, but in this case, I don't have any. So what am I going to do? Well, what I'm going to do is I'm going to load a Bollinger Band, for example, okay, to see where those Bollinger Bands are, okay? And, 136.32 right here, okay, seemed to me like an intelligent target, because notice that when it comes to the Bollinger Band, it takes to react and change direction, okay? So statistically speaking, that band may be a little bit of a stopping point. And of course, if we get there, and that means that the market is going to fall, Bollinger Bands are active and dynamic, so it's going to fall a bit more. So instead of 136.32, if that's okay, and we can review this next week, this is a long-term trade, okay? So we can review this next week. I'm going to set my target initially at 136.00. Okay, so that's going to be my plan, given the fact that I don't have a green UFO, given the fact that this market has been falling, like never before, based on the data on the screen. So let's do it. Let's plan and place an order here. So we are going to be trading the euro Sing dollar short. The target is going to be 136. Okay, the entry we said was going to be the green UFO there at 139.42. Okay, 142. We are currently trading at 39.5, so we're almost ready to get filled. And of course, we're going to use a stop loss in case it works against us. We always protect our risk, my friends. Always, either by using stops or using knockout options. but we never go naked. Okay, this is the recipe of problems. Or maybe you have a contingency plan where you have ways on how to hedge that you plan ahead. So, and then I'm going to use 140.25, which is right above this. Okay, 140.21. So I'm running it up just a little bit. 140.25. This is going to be my stopping point. Now, with that in place, I know my entry is 42. My stop is 40.25. My target is 136.00. So now the next question is, how much do I want to risk on the trade? Okay, how much do I want to risk? And this, of course, now depends on everyone. So the classical approach is to use a percentage of your account. So if you have an account with, let's say, $10,000, so you may want to risk 1%, 2%, 5%. So every trader is different. Okay. In my case, just to keep it very generic for everybody, and it's always the same for all sessions, all markets, I'm just going to go with risking $100. Just, it's not like it's a great number, but just to make it, easy math, maybe your account is whatever, and you want to go with 200, you want to go with 1,000, you want to go with 500, you want to go with 20. So I guess if I use 100 is a good reference for everybody. And this notice that automatically sets on TradingView. That's the beauty of TradingView. The moment you set how much risk you want to take, it will tell you how many units you trade. Okay. So again, 139.42 is my entry, 140.25 is my stop, 136.00 is my target. I'm setting my risk to be $100. This sets the size for me automatically. The only thing I need to do now is to click the sell button. Okay, now before I do it, I'm just going to zoom in here in case you guys want to take a screenshot and you want to review this carefully after the session is over, before you do your own trade, before you decide to use it in a paper money account, in a real account, with more than 100 risk, with less than 100 risk. All of those are your decisions. Again, I'm just trying to add tools for your practice so you can develop your skills. And therefore, I'm zooming in here so you can take a screenshot. Zooming out. And now I'm just going to click on the red button, 1, 2, 3. The order has been sent to CT index. You can now see on my screen how I got an entry with a stop and a target on this trade. Okay, entry, stop, and target. And this is in TradingView. And if I move to WebTrader and I look at trades and orders, notice how there is a euro Sing dollar order waiting there. And if you were to look at your mobile app with the CT Index mobile app, the order will be there too. Everything has been triggered and managed from TradingView, but it's all connected to the same account. Cool. So I'm going to take a sip of water. I have a question for you. You may be busy now because you may be, looking at your charts, maybe placing the orders, maybe calculating your risk. But I do need a quick answer from you guys. So please come back to me with an answer. How was this? I'm going to repeat this many more times, and I'm going to go from a long-term trade to something much more active. I just wanted to start from slower to faster, especially being our first day. But how was it? Give me some feedback. If it's too fast, let me know. If it's too slow, let me know. If it makes sense, let me know. If it doesn't make sense, let me know. If you need me to repeat something, let me know. But I really, really need you here so I can help you better, with the following trade, with the following sessions, and so on. Okay. Again, maybe I went way too basic, given your level of skill. Maybe I went way too fast. I really need to know this so I can, basically sync up and be, exactly where you need me to be. Okay. Okay, I see that. Cool. Wonderful, my friends. Thanks for that. So let's move into trade number 2. Okay. So our trade number 1 is the euro Sing dollar. It is a longer term trade. Now the plan would be to become a bit more active. Now, if I want to become a bit more active, then I don't need to care about the swaps any longer, right? Because if I'm going to be in a trade just for a few days, I mean, the swaps still count if you pay swaps instead of receive swaps, or receive swaps instead of pay swaps. It makes a little bit of a difference, but if you're going to be in the trade for only a few days or only a few hours, then it doesn't matter. So then I'm just going to totally ignore swaps now, just because I'm becoming more active as a trader. Okay, and you may have a rule in your trading plan where you never ignore swaps. And if that's the case, not a problem. Okay, the consequence, like everything in life, is the more you manage your risk, the less often you trade. So the more rules you have in your trading plan that limit you from trading, the safer you are supposed to be, but also the less active. In this case, because I'm moving towards being active, I naturally drop some of the rules. In this case, the one about the swaps, no need. Okay, no need for swaps anymore. I'm just gonna trade anything and everything. Okay. Now also, because I'm gonna become more active, instead of looking at the weekly time frame for the climate, I'm gonna start looking at the daily time frame. So now I'm looking at the daily time frame. And just to have a different viewpoint, I'm going to be looking at the S&P 500. Okay, so now we are moving from currencies to equities. Okay, we are moving from currencies to equities, and we're going to identify if we do have an opportunity to trade or not. Okay. Yes, a time frame for the trade. Great question. So the trade I was using the weekly time frame to identify my market climate, my market environment that confirmed it was okay for me to go short the euro Singapore dollar. Okay, so that was the weekly time frame, ACC. Okay, and the execution time frame, I was using the 4 hour, which is where I found my red UFO, which set my entry to be located here at 139.42 and stop 140.25. That was done on the 4 hour time frame. So I was combining a larger time frame to understand the overall movement of the market with a smaller time frame, in this case 4 hours, to try to spot and grab a tiny entry point into the chart. So if I'm wrong, I'll know very quickly and I'm going to lose little. But if I'm right, traveling from 139.42 all the way to 136, it's going to be a beautiful, beautiful trade with hundreds of pips, which are going to be, again, very low risk in exchange for great reward in the context of an overall larger time frame market condition, market environment, market trend, which is in my favor. Okay, so long story short, weekly and 4 hours. I just took advantage of your question, ACC, to give you a little recap of the rationale behind the trade to make sure everybody is on board with the rationale. Okay, cool. Okay, so going back to the S&P, thank you for the question. Great one. I love it. Okay, this is what I need from you guys. So please, everybody, work with me on that. Make the sessions way richer, and it makes a big difference on my end, guys, because I'm talking to a screen. I'll let you guys talk to me. So give me some feedback. Okay, thanks for that. So S&P 500. Okay, I am back to looking at the US SP 500 CFD. This is the S&P 500 CFD tracking the S&P 500 index. In other words, stocks in the US. Okay, this is an index made of 500 stocks, the largest 500 companies in the US to be precise. And when we look at this CFD, we can see the climate is confirmed to the downside. Okay, now I'm looking at this in a daily time frame, 1D. Okay, so every candle is 1 day, not 1 week. So still fairly relaxed, because if I get into a trade now, I don't plan to be there for a few weeks. I plan to be there for a few days. Okay, it's still quite relaxed, but it's certainly more active than before. So now, if this is the market environment, and by the way, copy paste what we have with the euro Sing dollar, it's a new down climate dot number 1. So if the climate propagates, we're going to get a collection of dots. That's what I'm looking for. Sometimes the climate will propagate less. Sometimes it will propagate a bit more. Sometimes even more. Sometimes a lot. Again, we cannot know the future. But certainly, statistically speaking, this seems to be a good time for us to begin planning a trade to the short side. Now, for me to plan a trade to the short side, I'm going to use, as I did before, the moving average as a reference. So the moving that was not straight, sorry for that. The moving average is located at 36.99, more or less. Okay, so I draw the blue line, because the moment I draw the blue line, that blue line will be seen on my chart on the right, which is the chart where I got the UFOs. Remember, the chart on the left is for me to answer, should I be a buyer or a seller? I said seller. The chart on the right is for me to answer, where is my entry? Where is my exit? Okay, cool. So now, earlier I was using the weekly time frame combined with the 4 hour time frame, right? Well, now I'm using the daily time frame, so it seems to me that the 4 hour time frame may be a bit too large. So I'm going to drop it down to a 55-minute chart. Sorry, not this one. The one on the right. The one on the right, I want it to be 55-minute chart. Now, a 55-minute chart may or may not be available in your TradingView, depending on the TradingView plan that you use. TradingView has a free membership, which between us is good enough. I use the premium one because I just like to have more chart and more tools. But to be honest, you don't need to. The free plan of TradingView, I would say, is more than enough to trade. But again, when I use the 55-minute time frame, this is a Fibonacci time frame, and those are not available with the free plan. So with the free plan, you will want to use the 1 hour, which between us, it's about the same. Okay, 1 hour, 60 minutes, 55 minutes, 5 minutes different is not too big of a difference. So notice how I got a UFO that is enveloping the blue line. If I look at the 55-minute time frame, I got a UFO which is enveloping the blue line, slightly different location, but about the same. So not too much of a difference. So again, the 1 hour is good enough. Okay. If you're a perfectionist like me, you go for 55, but again, you don't need to. Okay, just saying. Now, this trade doesn't make me happy, I have to say. And you may be wondering, why is that? Well, the reason why is because you can see that the vertical distance of this UFO, it's very, very wide. So if you recall that we said this is going to be my entry and this is going to be my stop. So the vertical distance represents visually what the risk of the trade is going to be. I mean, and I know it's all visual, but it's useful, to be honest, to be visual, because TradingView is actually scaling the charts automatically for us. So if I go back to the 4-hour time frame of the euro sing dollar, okay, so you see the vertical distance of that UFO, okay, it's like, that high, where if I go back to the S&P futures in a 1-hour time frame, the vertical distance, it's kind of like double, right? So if the vertical distance of my risk is double, I need the target to be double as far. And you know what? While targets that are far and nice on paper, the further a target is, the less likely you will get to the target, because the further it is, the more time it takes, and the more time you need to wait, the more whatever things happens in the market, all the world, could be a war, could be whatever. So things could happen, and next thing you know, unfilled orders are added or removed from the market, and the market moves in the opposite direction. So I like to be aggressive taking profits. Okay, I like to let my profits run too, but certainly not out of hope. Okay, and in this case, that UFO being very wide makes it difficult for my target. So no worries, I got more CFDs. I'm gonna move to the Nasdaq and see what the Nasdaq has to offer, and notice how the Nasdaq is giving us a UFO which is similar to the one UFO we had earlier on the euro sing dollar, which is much narrower. Notice how this UFO here is wider. So this one, I would skip it as well. I cannot change market data. So that's the UFO. I cannot change that. That's what it is. I'm not going to make up the lines just because. But I could choose which one to take and which one not to take. Just like I chose the S&P, I don't like it, I go for the Nasdaq. And if I didn't like the Nasdaq, maybe I go for the DAX. So that I can. Okay, but changing the lines on my chart, that is kind of like, feeling that you have the power to move the market by moving the lines, and that's not going to happen. So, we have to be mechanical and disciplined with how we trade. Okay, so the Nasdaq is the market I'm looking at now. This shows us US Tech 100 CFD. Okay, US Tech 100 is the Nasdaq index, because the Nasdaq index is made of 100 companies, which are tech companies. So, I'm going to do the same action. So on the left, we can see how the statistical approach of autoclimate tells us that the right action to be taken is to be a seller of the Nasdaq, not to be a buyer. So I just answered question number one. And in order to answer question number two, which is the location of my entries and exits, I'm going to first project the moving average to the right, and notice how I'm going to have to unsay what I said before. Notice how the location of the moving average is lining up with the upper UFO, which is very wide. I thought it was going to line up with the bottom UFO, and then I was very happy to do a trade on the Nasdaq, but it's not the case. The EMA, which I'm using as a reference to add more odds in my favor, because you can see that many times, price comes to the EMA and it bounces. Price comes to the EMA and it bounces. Sometimes it doesn't. Price comes to the EMA, it bounces. So I want to use the EMA as a reference combined with the UFOs to add more precision and odds to my entries. Okay. And that, in that case, the EMA will be located on the upper UFO, which is very, very wide. So I'm not going to welcome the trade. So let's move into the Dow and see what happens with the Dow. Well, with the Dow, we also have UFOs up here. We have a collection of 2 UFOs combined here, which the 2 combined, it's not that wide compared to the prior case. The prior case was 1 UFO only, not combined. Actually was wider than these 2 combined. So I'd be okay to explore this opportunity. The climate allows me to. Okay, so question 1, is it time to be a buyer or a seller? The answer is time to be a seller based on the auto climate. And if I was to project my line, well, I have a problem because here the EMA is not being enveloped by the UFOs. So this is when these things happen. This is when price goes through, because you know why the EMA is a good reference in this case. There is no red UFO. There are no red on field. There are no sell on field orders waiting to get filled, which is where I expect the market to stop and bounce down. That does not exist. The on-field orders to sell are higher. So we may need to see big pierce of the moving average like it happened here before the average is, hopefully respected later on. Okay, no problem. To be honest, when I scan these markets for myself, I just go speed of the light, speed of the light, speed of the light. Here, I need to explain why yes or why no. So I'm taking a little bit more time. But what about the FTSE? What about the UK index? Well, look, the climate is confirmed to the downside, right? So this is allowing us to trade. And the EMA is here. But notice how we don't have a red UFO right here. Okay. Now, still, you can see how price is reacting to the EMA. Notice how price stopped right there and started falling. So the EMA has power, and that's why we're using it. But at the same time, there is no UFO. So I would think that price is going to come from here to the green UFO, bounce back up, okay? And then maybe we'll have a UFO, and then I'd be happy to take the trade. So maybe a few hours from now, this is a good market to check again. But as of now, too soon to trade. What about the DAX? Okay, what about the DAX? So let's take a look at the DAX. So with the DAX, we have a confirmed climate to the downside. So that's good. And from a reference point of view, which is the EMA, I am going to project it here and notice how price came to where the EMA was and started reacting to it like it happened in other markets. Again, this is not a surprise. But again, we got the same story. We got no UFO right here at the moment. Okay, so this is a bit, uncomfortable because we went through multiple markets, and right now it's a no go, no go, no go, no go. So that's a bit uncomfortable. But at the same time, talking about developing your skill, which is one of the key purposes on these sessions, you also need to know that one of the job of a trader is to know when to sit on your hands. And in this particular case, with the equities, I guess patience apply. Or here's the alternative. And now let's change hat. I'm going to be a bit more active now. The alternative is to be more active by lowering down the time frames. And for example, this move that is happening now, maybe we can capitalize on it with smaller time frames. So let's do it. Instead of the 1 day, I'm going to move to the 1 hour. So what do we have on the 1 hour time frame? On the 1 hour time frame, we have an up climate. Now, I am planning now on a trade to be in and out in an hour or two, right? So this is intraday trading now, okay? So that's why I'm using the 1 hour time frame to assess my climate. So to be in and out quickly, right? I plan to go long, not to go short, which, by the way, this is totally compatible with what I said before. Earlier, I said we were planning to go short the equity markets in a daily time frame, but for that, the equity markets had to go up first to meet the EMA, which the EMA was higher, isn't it? So we have room to go higher, and we can do that on a lower time frame. Now, if I'm going to use the 1 hour time frame, I need to combine this with something lower time frame, which normally I use the 8 minutes. Again, this is another Fibonacci time frame, which in this case, again, if you are using the free version of TradingView, you'll probably have to use either the 15 or the 5. So I'm going to go for 15. Okay, this is the 15-minute time frame, and I'm going to move my blue line to realign the blue line to the 1 hour EMA, and notice how the 1 hour EMA is right here on the DAX, coming to those UFOs. Okay, coming to those UFOs. So I like it because the moving averages are moving. Okay, so if the DAX falls a bit more, the EMA will fall a bit more and will come to kiss my UFO, which allows me for an entry. Okay, right now you can see my blue line is a little below the EMA, but remember, if the DAX falls, the EMA will fall too. So I'm okay with that. So that entry makes sense to me. So what about the targets? And it looks like we are 5 minutes away from the top of the session, which is great because I think we have time to take this trade. So on the DAX, so we got 12,443. That's the UFO on my 1 hour time frame. That's gonna be my target. So we are going long the DAX with a target at 12,443 with an entry located at 12,299. 12,299.5. This is going to be the entry. Okay, with a stop loss that should be located at 12,280. Right there. Okay, now in this particular trade, there is one concern I have, which is the fact that this UFO is basically merging with the upper UFO. So I would feel much more confident about the trade with a stop below 214, which is going to be, let's call it 213. Okay. Now, if I do that, of course, this trade is not the best trade of the year. It's 1.66 to 1. I would have preferred the trade to be a little like, more like 2 to 1, 3 to 1. But again, 166, it's not too bad. It's not amazing, but it's not too bad. And again, because one of the reasons for these sessions as well is to practice, and we only got 5 minutes to go to the end of the session, I'm going to go with it. In a normal case, I would take a look at, what about the S&P? What about the NASDAQ? What about the UK markets? And if any other market was to provide the same setup, but instead of 1.66, it gives me 3 to 1, for example, I would rather take the other trade. Again, we have limited time, and this is good enough, so I'm just going to go with it. Okay, now, how much I want to risk? We said I was going to go with a flat risk of $100 per trade all the time, just to make it simple for the sessions. So $100 at 12,299.5 with a target at 12,43.00 with a stop at 12,213. That's the plan for the trade. Let me zoom in case you want to take a screenshot so you can review after the session is over. And after you have taken the screenshot, I will then go ahead and take the trade. And then before we go as well, I'd like to ask one last time if there is any question. And also I would like to look at WebTrader to find out if we got filled on the Euro Sing dollar trade. We were very, very close. Maybe we got filled and I didn't notice. So, okay, I guess you had time for the screenshot. So I'm going to click buy. Okay, click buy. And here we are. Okay, this is my entry. This is my stop, risking 92.26. If I get slippage, it's going to be 100. And my target located all the way here, okay, which is where that red UFO is on the 1 hour time frame. Okay, so again, if you think about what I'm doing, it's quite simple. I'm using 2 time frames, 2 charts, one gray, one white. One is telling me the answer. Is it time to be a buyer, time to be a seller? Giving me the EMA as a reference. And then on the right, I'm using the UFOs to fine-tune my entries and exits, set my risk, entry stop target, define the risk of the trade and therefore the size, and then I execute. So it's not too complicated, even though I am aware that it's a lot of talking in this, my first session, giving you plenty of side explanations, which sometimes in life less is more. So hopefully I found a balance today with not too much, but also not too little, because sometimes in life, more is more. So yeah, trying to find the balance there, okay? So anyway, it'd be nice in the 2 minutes we have left if the DAX was to fall, so we get the feel while we are together in the session. If not, I'll just leave it open, and we'll talk about it next week when we meet again on Monday. But yeah, it'd be certainly nice that we get filled while we're still in the session. So, Mr. DAX, please be nice to us. In the meantime, I'm going to bring this trade here. So we still have the Euro, SGD, and the DAX as an order. It doesn't show as a position, which means that the Euro Sing did not give me a fill yet. So I would like to go ahead and take a look at the chart very quickly, just to kind of recap the session and find out, more about swaps to the downside, euro sing dollar. So the euro sing has not got to me yet. Yeah, it's trading at 39.37. Our entry is 42. Okay, and you may need the price to go slightly beyond 42 because of the spread to get your fill. So yeah, we are very, very close. I would say we may get a fill anytime, any moment. And then when it comes to the DAX, coming back to the DAX, come on, Mr. DAX, you're very, very close, just a few points away. It'd be nice that it drops a bit more and it gives us a fill. Okay, so we just hit the top of the hour. The climate has just updated. The climate is still telling us being a buyer is the right thing to do. So again, the trade is valid. So I guess that we're going to have to conclude the session here and say bye to everybody. But certainly this trade is valid for the next hour. So if you keep it open and you get a fill during the next hour. So, I wish you good practice with the trade. And please let me know how it went. I didn't share my email. Well, actually, I did in the introduction slide. Let me bring it back so also you can get your QR codes one more time. I'll leave the screen. I'll leave the QR codes on the screen for a second before I show you my email address one more time in case you have questions. CI Full, Jose, could I use Auto-UFOs for stocks? Yes, indeed. Auto-UFOs is an intelligent tool. It's a patented piece of technology that adapts to the markets. So no matter if you trade Singapore stocks, Indian stocks, US stocks, if you trade indices, commodities, currencies, anything would be processed intelligently by the tool, and it adapts to exchanges and products and markets and everything else and timeframes. So yes, the long answer, the short answer is yes. So here's my email in case you need to contact me. Jose Blasco, jose@predictive.com. I'm here for you, my friends. In case you have not noticed, I am extremely passionate about the markets. It's my life, is what I do. I love them. And if you happen to be also a passion trader or developing this passion for the market, so for sure, keep in mind that I'm here for you, and you don't need to be shy. I was a learning trader in 2008 when I started. I am a professional trader for years now, but certainly I remember my early stages, and I love to help traders. Okay, so count on me, count on us, on our company, and we'll be in touch next Monday. Okay, it seems that the DAX is reacting to the moving average. Okay, we just needed to go just a little lower, almost there for our fill, and then we may get our move, and then we are in the trade. Okay. Anyway, see you soon, everybody. Yes, very kind of you, CI Full. I'll be here every Monday. If you take a look at our website, you will see the calendar there. So, looking forward to seeing you in the next one, and everyone else. You guys take care. Happy trading, good trading, everyone, and stay in touch. Bye-bye, everyone. Take care.